Good morning, everyone. So today's video is going to be a little bit different. I'm going to be going through how I caught this 21R trade, how I executed it, but I'm also going to be showing you clips from last week's trading room, which showed exactly how I coached the crew into this trade and how I showed them how to find this high probability setup. So there's absolute gold in this video. So just enjoy and yeah, let me know if you like it. Yeah, so this for me is the only obvious draw on liquidity. So I would obviously, like I said, be favoring shorts. There is this 12-hour gap that has been inverted, so you'd naturally expect it to come down to here as well. What have we got? Any on four? Obviously, we're just rotating from internal now. Well, external to internal. We haven't really hit much around here except this demand zone. If you obviously consider the drop from yesterday or the last few days, then you've got obviously major discounts. So shorting up here in terms of this swing range isn't ideal, but you could still get great scalps on intraday sessions. So we'll see how this goes. I can't really use that 1 hour yet, but there's this 30-minute that's pretty cool. If you lost this 30-minute here, we've got the wickless 024. If you lost this, then you've got a real nice bias. So if you come down, you close the hour below, half an hour below there, maybe you get a retrace back into premium, then you know you've got a strong draw on liquidity to these lows. You've also got that wickless candle around here as well. So ideal situation for me would be to come down, show that weakness, because if we were truly bullish, this gap wouldn't be lost. So if that did get lost and then it came back up and then we got a nice retrace maybe into that premium zone, we then retrace into another bearish gap up here, and then we invert a bullish gap here, then we can start shooting for that really nice trade. So this would be like the real high probability setup, hashtag HP. That would be the ideal setup for me, and that would be one I would dip into my accounts for. I'm only going to be using eval, and I'm only planning on using eval while I'm still getting back into the swing of things. But yeah, that's essentially the best scenario I can imagine. You've got anything else? Let's have a look. Let's have a look. Anything nice and juicy. That's also a gap right there as well. Is that right? Yeah, that looks like a gap. So this is definitely an area that I would be looking for. If you are short, this is a really nice final target for you guys. Obviously, like, you may flush through that, so you'd want to keep at least one runner. But if you are looking at shorting these highs and you do start seeing that bearish order flow, you know, this is obviously a really good zone to be looking at. The 12-hour tells us that we're going to this low. But as you can see, that's still a lot. That's like 100 points worth of move. So you don't need to catch all that. And if you're trying to catch moves like that, really, you're just being a little bit greedy, to be honest. It's not really necessary at all. Like with 1 mini and 10 points, you can hit your XFA target for the day. You know, you only have to make $200 per day, 5 days, and you can request a payout. So, you know, if you want to try and pass an eval in one big go, then sure. But, you know, we're just taking it easy around here for now, okay? So this, to me, is just the most clear and obvious gap in this whole area. So this is just one I'm going to be watching. I would rather wait for this to be inverted and then potentially fake out this trend line, come back up, and then get a really nice high probability short that I can then go down and target those levels. Because, you know, you've got the top of that range right there, you've got the discounts, you've got the 30-minute gap, you've got the trend line, all kinds of things like that. I'd much rather take a really nice high probability setup and just be patient for that to present itself. So what I'm talking about really by clear order flow is you're simply looking for price to clearly show you a trend like this. And what you're looking at is things like this. And you've got this internal range liquidity, and you've got this external like that. And then when you zoom in to this level right here, so you zoom in over there, you're literally looking at price coming into a level like this, and it comes up and you invert like a bullish gap like this. Or maybe you get like a CISD or something like that. And essentially, this will obviously be on a lower time frame. And this will be like on your medium time frame or higher time frame, whatever. So this is essentially clear order flow. And you just, I've mentioned this before, but you're just going with like the flow of the market, you see? And this is just clear, obvious, nice and easy order flow. Like these are the trades that are so simple that it makes trading feel like a joke sometimes, like it's too easy. And if you're able to identify that environment and able to maximize those opportunities, one, you're going to take less trades, which a lot of people don't really like. But if you just take less trades, you're guaranteed to lose less money. That's guaranteed. Because if you're trading constantly, you're naturally going to take worse trades. So if you're able to identify a market or an environment that is really clear, really obvious, you know exactly how to trade with it, and you know where your targets are, then it's really simple to just trade these kinds of rotations. And this is where all the money is. And like, look at yesterday. Like yesterday, you see this just clear and obvious, just burning price action. It's just bleeding. So like when you're seeing this and there's just clearly no intent, you're just respecting bearish gaps, you're just moving below lows, displacing below lows, and you're sweeping highs. Where are you going? Well, you're going to that liquidity, obviously. And then once you break past that liquidity, are you bouncing from here? No, you're not. So you're going to this liquidity. And then you see this big aggressive reaction, and then you see that big gap form because of that because of that displacing reaction. And then you see that rotation from external into internal. So literally this, you see that internal rotation. And then what you'll have is, no doubt, you'll have low time frame inversions like this, so low time frame signs of weakness, and you can play that trend. You hit the external liquidity like that. If you've got multiple contracts, you can take a TP. If you haven't, you can hit break even, okay? And you just take the risk off as soon as you guarantee that, because you can clearly show that there's a trend, okay? And you're not getting reactions from lows. You're not trying to even trade those lows. You're just looking to follow the flow of the market. And you're just looking for where is the next liquidity. Well, the next liquidity is clearly this low. So if you were to have got that, and I know a bunch of you guys did, you can just, boom, shoot for those lows. Like a few of you guys yesterday in London took those exact trades, and it's no coincidence that all of those people are students of mine, because they understand that. And they understand that if price is showing clear intention, then it's a good idea to go with that intention, okay? So if you're always the kind of person who's trying to catch these reversals, you're playing the game in hard mode, and it's, why not just try and maximize the easy mode? And easy mode exists. You just have to be patient and waiting for it, okay? So like today, where is the easy mode today? Well, it's waiting for this 30-minute gap, which is the most clear, obvious gap on the entire chart to invert, okay? We've got 5 minutes until it does. So hopefully we break below this and we get that clear and obvious draw on liquidity for lower, okay? Again, hopefully we retrace up into another gap somewhere where we can use that as the delivery point. Hopefully that happens within the premium. And then what we're doing is we're setting up an extremely high probability trade where we can look for those low time frame inversions to play that internal to external. And then we can go TP1, break even, whatever, and we can hold the runners for the next liquidity. Where's the next liquidity? Well, it's here. We've got that wickless candle, we've got that gap, we've got that 0.5. We'll take profits there. If we've still got contracts left, we'll hold to here. Or if you just, you're trying to maximize one contract, one mini, then you're just constantly moving your stop down, okay? Just locking in more profits. Watch it waterfall. Like yesterday, it just waterfalled. I was just locking in my stop, just following it with my stop. That's all you need to do. And then you just look, what's the next liquidity? Like there's an old saying in crypto from like chart champions and Toros that like it's just level to level trading, and it's the same goes with liquidity. It's just like, where's the next liquidity? Where's the next liquidity? And then once you reach for that liquidity, then you look at the reaction then, and you say, right, what was that reaction like? Can I gauge what that reaction was like? Am I seeing a change in order flow? Am I seeing a change in market structure? Am I seeing signs that the market is going from a bearish phase into a bullish phase, or from a bullish phase into a bearish phase? And those phases are very, very easy to define, super easy to define, and I'll explain that as well. I'll just quickly grab the cookbook. So in my inversions section, I've got this little section here. So FVGs also give us insight to the trend of the market. Given that bullish gaps hold and bearish gaps invert, then naturally we must conclude that the market is trending bullish. So in this case, you can see here, bearish gaps are failing, bullish gaps are holding, lows are being swept. This is clear bullish order flow, okay? And when that becomes blurred and it's not so clear anymore, then you can start to think, all right, well, maybe I need to remove myself away from this bad price action, or maybe it goes and shifts. And then you can start thinking, right, well, okay, I'm going to look at trying to get in on the other side. Where are the places of maximal opportunity? And I used to talk about this a lot, like, what's the story of price? Like right now, since this morning, the story of price has been bearish, but now we're coming into a medium time frame area support where we could be seeing a bounce. Okay, so you're always weighing up, where are you in the chart? Have you taken liquidity, and how significant is that liquidity in terms of premium and discounts, and time-based liquidity, major pivots, things like that. And like with reading bearish order flow, it just comes down to asking simple questions like, are we sweeping lows? Are we pushing or displacing above highs? Are we bouncing from bullish gaps and inverting bearish gaps? That is bullish order flow. Once that changes, so like say for instance right now, this is clear bullish order flow. If we were truly bullish, this gap will hold. That is just a certainty. That is a fact, okay? So if we were truly bullish, this gap will hold. But now look what we're doing. We're producing this really large engulfing candle that is not only engulfing the liquidity sweep candle, but it's also engulfing the second candle. And it looks like we're about to invert this 30-minute gap. So there's no doubt that this order flow has now begun to shift bearish, okay? And a few of you have said, probably thinking, well, it was clear at the high. You could have called that reversal. Yeah, but that's hard mode. Like, let's just wait for easy mode. All right. Yes, you could have called that, and a few of you did, because you're good at trading. You've done this a lot. It was a great area. But now we've got clear high probability conditions that we can act confidently in, and most people aren't as far ahead and aren't as experienced as the people who did take that short. And you guys want to learn, and this is how you're going to learn. You're going to be able to read price action and take an objective view of the market. Okay, it's not like Bitcoin or Ethereum or whatever, and it's like you believe it has to go up. You don't have to believe this thing has to go up. You can think what you want about tech, but this thing shows that you get these huge intraday swings. And with a prop firm, look at these intraday swings, huge. And with a prop firm, you're playing with so much capital that you don't need to catch these huge moves. You only need a little move. All right, so there's the inversion of the 30-minute. So we're definitely in a bearish environment now. So what we're going to do now is we're going to look for a nice place for a retrace, somewhere to deliver from, and look for that short. Of course, this thing could just keep pouring. Of course it could. But there's nothing I can do about that. There's literally no trade for me. Like yesterday, if you didn't catch that short, there was not a lot of chance for you. Once that starts pouring down, there's not a lot of chance. You need those retraces. Like, look at this. Like, that was such an easy trade. Bang. I believe I did shout that trade out as well. Was that the 30-minute? Yeah. So here, exactly what I was talking about. So you've got this. So this was a trade I shouted out in the chat. So you've got this 30-minute gap, right? You like ignore everything else on the chart. This is a 30-minute gap where you've seen a displacing candle, a large displacing candle, form a gap underneath a liquidity. Okay, so if you form a gap underneath liquidity like this, naturally you're thinking that you're going to continue that trend, and you're just getting a really easy trade from internal to external. You just look at that really easy rotation, okay? Going with the flow of the market. And if you would have shorted around this area, okay, and you look for those low time frame confirmations and you take profit one there, look how much you got rewarded. Look how much you got rewarded for that. So trying to catch these reversals from external to internal is very difficult, and it's very difficult because you don't really know where it's going to stop. But with internal to external, you've got such a really clear and obvious place to hit break even or hit take profit, and you can be rewarded with these huge swings because you're going with the flow of the market. Okay, this is really important stuff, guys. And honestly, it's extremely profitable trading, and it couldn't be any easier. I honestly don't see how trading could be any easier. You draw in one box, one line. You're looking for simple candle closures. You know, I don't see how it could be any easier, personally. All you've got to do is just dedicate yourself to learning the rule set and dedicate yourself to spending time with the NQ, with a single asset. Don't fuck around with crypto. Maybe just keep your spot bags, be an investor if you're obviously so interested in the tech. But no, was that equal? Ooh, it took it by a tick. All right. But if you spend time with this asset, you're going to learn its characteristics, and you're going to learn things about like what are great draws on liquidity, about like news wicks, about like equal highs, equal lows, trend line liquidity. There's so much going on with this market every single day. There's so much money to be made. It's crazy how good it is. All right, so if you consider hostile powers range here, did that hit? No. You're now back testing that range high. So this is just like one huge deviation up here, which is really good. You hit that 1.618. So in terms of gappage, it hasn't really given us much. So like the top gap here would obviously be favorable because that is well into the premium. So that's like my ideal place for a short. But what I will do is I'll mark out liquidity along the way. So we got that is our first proper gap right there. Let me just get rid of that. So like I said before, my favorite high probability setup is kind of happening because we've faked out this trend line, and we didn't take all of this trend line liquidity yet. So I'm hoping we do get a nice little bounce here. Obviously we've got a bearish bias now, and we can act with that. So we're just gonna simply look to find clear, obvious bearish order flow. Okay. So can anybody remind me? I know I've been on a bit of a rant and that was a bit of an information dump, but can anybody tell me how would you define bearish order flow? It's a good question. Ooh, someone took a scalp long. Fair play. Fair play. Oh, it missed that liquidity by a tick. That's crazy. That's a good one. Bearish gaps forming and holding. What else? Manipulating highs, displacing lows. Perfect. That top 15 minutes obviously preferable. We haven't finished this 15-minute just yet, so we may completely wipe out this whole 15-minute gap here if we start pumping, and then we come into this 15-minute gap where we've got really nice premium. I do like the fact that we just missed that low by a tick, so they're relatively equal lows because it's literally a tick. You can see that this was 3.6 and this was 3.6.25. So that is really nice. They're basically equal lows at this point. So that's another point for the bulls. Sorry, bears. Got wickless candle. We've got the 0.5 of the TR pocket. We've got that gap. We've got these relative equal lows. We've got the 30-minute draw on liquidity lower. We've got the 12-hour draw on liquidity lower. We've swept major liquidity up here, and we've shown clear, obvious bearish order flow. So if you weren't bearish before, you should be right now. Okay. That was the theory. Really, really easy if you ask me. So now let's talk exactly about the execution. Let's get rid of that and let's go into it. So obviously I talked about the idea of retracing back into the premium and this higher 15-minute gap. So you see we've got nice premium there. We're above the 618. It's looking good for a great place to get that short that we're looking for. Obviously we've had that retrace higher. We haven't even taken this liquidity yet, which is what we were expecting. And of course we were looking for this wickless candle down here, which of course was missed there, but we also have that gap right there. So that was the idea, that we would be looking for a short up here. So let's talk through the exact entry model. Let's do the 1 minute. On the 1 minute, you can see that as we came up, we were approaching this liquidity, which I was looking at. But what we did instead was we began to consolidate. So let's just play it forward a little bit. You see we produce a high there. Just consolidating. And what do we do here? Produce another high there. So those are exact equal highs, and I use an indicator that points these out, so it's very handy. You can DM me or whatever if you want to get that indicator. But once they get pointed out, I'm expecting them to get hit. So as soon as they get hit, I'm thinking, right, once that's cleaned up, I am now confident in shorting because we've taken out that area of imbalance in the chart. And then once this happens, you can see that you create 3 equal highs. And then what do? We then take it again. So here is where I officially become interested in that sweep of liquidity. I was expecting a bit more of what I was expecting. I was prepared for more of a move up into this little liquidity here, but I'm not like set in my ways with any level. I'm always just gauging reactions from liquidity. So this caught my eye, especially because we just got a nice volume candle there. If you can see that, I have this indicator here from Leviathan, which is relative volume, that shows me all the volume relatively. So very, very handy. You can see this is where we picked up some nice bearish volume. We've just taken out liquidity, so that immediately drew my eye. So then what did I do? I went down to the 30-second, which I really like for entries. That didn't work. Let's go again. I went to the 30-second, and you can see another little tip for you is when you see liquidity taken like this, you see that liquidity taken, and then what do we have? Like, just super simple trading here, guys. Look, you have an engulfing candle. So you see how that candle engulfed the previous candle. So this is a really, really good way of just gauging reactions from liquidity. As soon as you get that liquidity sweep candle and then you get that engulf, then it's a really, really easy indication that you've potentially had a strong liquidity sweep. So what did I do? As soon as I saw that, I entered short there, and I put my stop above the high. And that was it. You could have waited a little bit longer for that extra confirmation, and you could have waited for this CISD, which obviously happened. So as soon as that happens, you know that you've gone from a bullish delivery into now a bearish delivery. Okay, so you've taken out the opening candle of that initial push into liquidity, so you've definitely shown weakness after sweeping a high, which is what you want to see. So what did I do at that point? Well, I simply just look for the next liquidity. So we play it forward, you can see that we start to now fall, and you start to see this high volume candle coming in. So as soon as we start dropping into here, I'm thinking, well, there's not really any significant gaps here. You can see that price just sort of was quite high frequency, didn't really produce any 1 minute gaps here. So as soon as it starts dropping, I'm thinking, well, that's the most obvious liquidity. That's where I'm going to hit break even. Or if I was trading with multiple contracts, which I wasn't, but I was trading with multiple accounts, I was using a copy trader, that's where I'm going to maybe take some profits. So that's obviously a sensible thing to do. But obviously in my mind, all I'm thinking about is that larger play that I've just been discussing in the trading room. So obviously this is the 15-minute gap inside the premium. So this is a really, really high probability zone where we could be looking for that short, and we have major draws on liquidity. So we're looking down all the way here where we can get that wickless candle, this gap here. Okay, so we just had so many reasons to be looking for price to come down there that it was fairly obvious that we were going to drop at this point. Obviously we also had this big 30-minute gap here that got inverted, so we were looking at this being now bearish price action. So we'd close below here, we're looking for that retrace, which happened. We got that retrace into premium, we delivered from a bearish gap, so now we're just looking for the flow to continue. We're just looking for that. Okay, this is super simple, and if you just play that forward, you can see we pretty much just waterfall all the way down, and that's what happens. And you can see we literally hit the level. That was the level. This was the top of the gap. I'm gonna go up a time frame, you'll be able to see it better. Ooh. See, that was the top of the gap right there, pretty much. Banged into that very nicely, dropped into this gap, took out that liquidity, took out the wickless candle, and we had an immediate reaction from there. So that was how I executed. I don't think that's particularly difficult, and you can see that trade took, well, that's where I targeted. It was around there, 21R, and that trade took exactly how long to play out? So I was in on that candle, and I was out by there. So that was roughly 50 minutes. Pretty easy. If you like this and you want more, let me know. Like, comment, follow me on Twitter, and yeah, I'll produce more. Bye.